Hey everybody, hope this finds you doing well and having a great start to your week. This is Danelle here at Networkchain, and as you can see, Bitcoin is getting closer to all-time highs. We shall see at the time of recording. You can see it's right around that $124,000 level. It's up over 13% over the last 7 days. You can see Ethereum is bumping up against 4,600. It's also up over 13% over the past week. We have XRP underperforming Bitcoin and Ethereum. It's up about 8%, which is still obviously a great return over 7 days. Solana up over 14%, the biggest performer over the past week thus far. Dogecoin, the largest meme coin of them all, up over 12%, currently trading above 25 cents. And then you have Cardano rounding out the top 10, currently up nearly 11%, trading at 85 cents. So if we take a closer look at the Bitcoin chart, and you can see here that we've kind of been trading in this range, and we've talked about this several times in some of our last videos. Bitcoin is basically trading between that 109, 110 level and 122 or so, closing near those all-time highs, which is around 124.5, somewhere around there. But you see that we have to find whether or not Bitcoin will be able to bust out of this, I guess you can call it consolidation range over the last, let's say, 4 months or so since the summertime. Now, if we do find that it is able to get past this resistance, because basically the last couple of times that it's hit up against this resistance at those all-time high levels, it eventually came back down. So now we're looking to see if it can actually get above this level, and it has to close above this level to show some type of confirmation that we could potentially then take on towards price discovery to see what that next level is going to be and how high up Bitcoin can actually get on that next leg. Obviously, this could be another reversal coming back down, and sometimes it takes a few times for a stock or a crypto, for example, to bust out of a particular range. It can take several times. Sometimes it doesn't do it. It all depends on obviously macroeconomic conditions as well. But we are going into are now in the fourth quarter of 2025. And generally speaking, when it comes to seasonality, cryptocurrencies, risk on assets tend to do very well in the fourth quarter. So we still potentially have a lot of room to run towards the end of this year. Obviously, we'll keep you posted on that. But our main goal is to talk a little bit more about why investing is so important. And basically, it's become a necessity in order to reserve value and increase purchasing power, because just saving your money, which we work hard for, in a savings account and getting the sometimes not even 1% per year, just having your money in a savings account is not going to cut it. You have to at least beat inflation. And right now, inflation currently is around 3%, just under 3%, 2.9% or so. So the Federal Reserve already did a 25 basis interest rate cut, and they could potentially be doing more. They wanted to at least have a 2% inflation rate. It hasn't gotten all the way down to 2%, but because we're having issues with the labor market, not as many, there's a lot of jobs, a lot of unemployment. So there's a number of things that, the Federal Reserve has to look into when they make the decision with regards to the federal funds rate. But we're going to show you some charts. First off, we want to shout out INFRAA underscore on X with a couple of these charts here. You can see here that since ChatGPT has been released, you can see that the total job openings have now plummeted, have gone down. Basically over the last couple of years. And I think a lot of that has to do with obviously the rise of artificial intelligence. We're still really in the early innings of artificial intelligence. ChatGPT obviously is very popular. It's a private company, hasn't even gone public yet. There's a lot of other competitors, large language models that are similar to ChatGPT, and a lot of other companies that are incorporating AI into their business processes. But we're still in the process of the infrastructure. When you look at companies like NVIDIA, which are creating the chips, the AMDs, the Oracles, with cloud storage. So there's so many different legs of the network when it comes to artificial intelligence. So we're still pretty much early on, but given that AI is on the rise, that also could threaten a lot of jobs. And so we're already seeing that the job openings have been declining since ChatGPT was released, but we're also seeing that the S&P 500, so if you put your money in the S&P 500, the S&P 500 continues to go up. So you can see as employment openings are going down, the S&P continues to take a sharp leg up. Now, definitely we'll have another type of correction at some point. We don't know obviously when that's going to happen, but you know, it goes up to the right, but it doesn't go up and to the right forever. There's definitely going to be some downturns and downtrends throughout time, but that's why, you know, people talk about investing over the long term, you know, dollar cost averaging, you know, putting in $10 a week, $1 a day, whatever the case may be, whatever you can afford, whatever you can save, you want to put that into something that is going to grow, make your money grow for you, make your money work for you to provide more value. So the S&P 500 is the benchmark index, which most institutions who are fund managers, they try to use that as the benchmark to at least perform and outperform the S&P 500. And generally, over the last 30 years or so, the S&P 500 will yield about an 8 to 10% return. So far this year, I believe it's somewhere over 20%, so it's exceptional over the past year. But obviously, you know, it can fluctuate throughout the years. But generally speaking, if you put your money in something like the S&P 500 and leave it in there and just let it grow over time, it definitely will outperform just you having your money sit in a savings account. Here's another chart. As you can see, when you look at people's income and how much they make compared to the M2 money supply, we talked about that last week, which is basically the closest liquidity assets that you can have when it comes to checking accounts, savings account, money markets account, basically the money that's circulating in the economy. And when it comes to inflated dollars, debasement of the US dollar, for example, the more money that is coming out into the market, the more money that's being printed, obviously is going to weaken that dollar, that fiat currency. And so we're seeing with the weakening of the US dollar and more money, more actual, you know, dollars that are out in circulation, it is actually showing that personal income, the amount of money that people are making, is going on a downslide. And this is just a drastic downslide when you look at personal income over money to supply. So basically the denominator, which is money supply, is getting larger and continues to get larger, and that top line, which is personal income that people are, you know, getting every year, is either staying stagnant or not even coming close to keeping up with that bottom number of M2 supply. So it's just another reason why it's very important that we have to try to find ways to increase purchasing power, or at the very least store value, given the fact that we have inflation, will continue to have inflation over time. Shout out to Charlie Biello, which is another great follow on X and has a lot of great charts. You can see here when you look at the asset class returns since 2011, you can see gold and Bitcoin right there at the very top. Gold, just in 2025, it has been on an amazing run and reaching all-time highs, similar to Bitcoin as well, reaching all-time highs in 2025. So far, it has yielded almost a 50% return. Year to date, Bitcoin 31%. You can see different stocks, emerging stocks, convertible bonds, the NASDAQ 18%. So high yield bonds. So at the end of the day, you know, compared to cash, which is what you would get, you know, just having your money in like a basic checking account or savings account, you need to find ways to outperform this number. You need to find ways to outperform the inflation number. So if you go here, if you put $100,000 in a portfolio, whether it be leave it in cash and U.S. Treasury T-bills, which you can get a little bit of a higher interest rate than, say, if you just left your money in a savings account. If you put your money in like a SGOV, where you get a decent return, and you're basically giving money to the government in treasury bills, and they're basically giving you a return to be able to use your funds for whatever reason. Anyway, if you take that and put it against the performance of the S&P 500 over a 30-year time span, you can see that $100,000 would have turned into $2.5 million compounded over 30 years compared to $392,000 compounded over 30 years. So just another reason that you want to look at opportunities to be able to grow your money, to be able to compound your money over time. So once again, we mentioned inflation. You can see this is inflation over, you can barely see the years, I apologize for that, but this is 1965, this is 1980, this is 2000 right here, then you have 2010, and then 2020 going into 2025, and you can see that we had a huge spike in inflation in 2022. That's why the Federal Reserve went ahead and decided to spike up and increase interest rates to get that inflation down. There's various reasons how that happens, but we're seeing that no matter what, you're going to have inflation anywhere from 2% all the way up to, which is crazy, in 1980 it was over 13%. So even if you just kind of take the middle of the road, it's going to be around 3 to 5% inflation. And there's so many different ways that you can measure inflation, so many different obviously sectors that you can measure in inflation. So I know that when I go to the grocery store, when I pick up certain items, they're definitely more than 3% higher than what they were a year ago or 2 years ago. And the thing is that those prices basically never go back down when it comes to insurance, things of that nature. So we have to find ways, if our wages are not keeping up, we have to find ways to be able to increase purchasing power so we can keep up with these rising costs of living. So definitely something to consider, food for thought. Check us out on X as well as Instagram. Another shout out to Charlie Biello. Over the last 10 years, you can see the performance of Bitcoin, another well-performing stock, Nvidia, Tesla, Microsoft, a lot of the Mag 7 you can see here. The S&P 500, once again, just over the last 10 years, compared to inflation, which is, you can't see it here, it's about 36% over the last 10 years. You can see gold has fared much better as well. So basically, if you make the right choices, you can check with your financial advisor or just do your own due diligence. Obviously, if you're going to put your hard working money into something, you want to make sure that you do as much diligence as possible before you do any type of investing. But just something to think about. Obviously, we'll continue to talk about what's going on with emerging markets and cryptocurrency. We are going to see how Ethereum and Bitcoin and some of the other cryptocurrencies do over this week. Once again, we really appreciate you watching and look forward to linking up with you soon on the Networkchain. In the meantime, take care. Bye-bye.